As Bitcoin approaches the final resistance before a move to the prior all-time high, the biggest question going around is, will Bitcoin see a correction? That is what we're going to be discussing in today's video. Let's dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. Ever since the breakout of the 770-day long resistance at 48k, Bitcoin has been in a strong short-term uptrend, having reached a price of $53,000. The big question is, will Bitcoin reject from this resistance, or are we going to continue higher? In today's video, we are discussing the short-term price action, the macro price action, the possibility of a correction, or the possibility of a continuation upwards. We'll also be going over the 4-year cycle and a very key indicator you should be watching out for on the monthly chart. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Look at all the profits we've been printing in this channel. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our help, our daily video, and of course, our trade setup chat, guys. If you're interested in access to all that, go ahead and contact us in the pinned comment of the free channel. You can find more information via that link. You can find our entire trading track record. And if you want to have an inside exclusive look at the VIP, you can also see a video about what it's all about. Let's go ahead and jump into the video. So starting on that market data, how are we currently looking? 24-hour volume is up a considerable amount. We're up 11%. We're sitting at a total of 150 billion, so relatively high. 24-hour liquidations up relatively high as well, sitting at a total of 185 million. This is up 4% in the last 24 hours, with 88 million in long liquidations and 97 million in short liquidations. Taking a very brief look at the price action, we can see within the last 24 hours, we really haven't seen all that much happen, right? Bitcoin is realistically just been hanging around this same area. So this is a 24-hour period over here we can see. So this cluster of price action that we're looking at over here, I'm just gonna go ahead and chuck a box around it. It's kind of what we've actually been doing in the last 24 hours. Not really all that movement. We've seen a wick up to around about 52,800, and we've seen a low to 51,200. So we're looking at about a $1,200, $1,600 range. Again, not a huge range considering the price action. So with that massive amount of liquidations, we can assume that a lot of people are taking, once again, high leveraged positions with very tight stops at these levels, and they're just getting wicked out on these moves up and these moves down. So again, when we have mass volatility and we have these large ranges, you never really want to be using massively high leverage with very tight invalidations. You want to let those trades open up a bit, reduce your risk, so you can actually buffer any short-term volatility that comes your way. Moving over to the DXY, the DXY has done pretty much what we expected so far, and we did say we were looking for a rejection at that 105 to 105.5 reversal range. We have now seen that rejection. Again, if we look at the overall current trend, we can see we've had a negative momentum shift. Almost, we're just touching that trend line. So again, another 24 hours, we should see a negative momentum shift over here, and we should expect the price action to follow through. We are looking for a retest of 103. This will be very bullish. This is something to consider when looking at Bitcoin today, as if we do see the DXY pullback, it is more likely or not that we will see assets continue upwards. So overall narrative, we are keeping that in mind. Moving over to the S&P 500. 22 hours remaining until the weekly candle close. If we close above 5,000, nothing more to say than fantastic. Again, guys, if we do close this weekly, we expect a continuation upwards. These whole numbers, 5,100, 5,200, 5,500. These are the numbers we are looking for. Again, we have no data in these ranges. It is price discovery, and therefore we have to almost anticipate where people are likely to be taking profits, and generally people take profits around whole numbers or just before whole numbers. So 5,099, 5,090, 5,100, just around those whole numbers people look for. If we do break a weekly candle and close below this point at any point, it wouldn't be too concerning. We would not like to close a weekly candle below the opening price of the prior candle. That would be a bearish engulfing candle and would actually push the price into a short-term downtrend to retest 4,800, which is still going to be a high time frame area support. Again, if we come down and retest this level, not a big deal. This is actually a really healthy correction, which will propel the price back upwards. Only if we lose this local low at 4,730, which is again that prior all-time high, would that actually be high time frame bearish. Exactly the same premise goes for the Dow Jones over here, guys. Only if we drop below that prior all-time high price, which is going to be the support at 36k, will we look high time frame bearish again. Short time frame bearish underneath 37,700. Until then, looking fantastically bullish for a continuation up to 40,000. Let's go ahead, guys, and jump over the Bitcoin. Like we said, we have a lot to discuss, so really quickly going over what we're talking about. We're talking about this current resistance, and this is what we deem to be the final resistance, and we'll explain why this is the final resistance. We're discussing the probability of a potential correction from this level, what that could look like, what we're looking out for that to trigger, and why, even if we see a correction, it would still be very, very healthy for the macro price action. We'll also talk about higher targets if we do break out. We'll be talking about the monthly chart, discussing a very, very key technical indicator you should be paying attention to, and so much more. So before we get into it, a quick word from Bitget and BingX, and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin. So first and foremost, we're going to be starting on the monthly, moving down to the daily and weekly, and then finishing up on the short-term price action, doing the opposite of what we did yesterday. So first, let's start on the monthly chart, and there's a few things we want to be discussing. Mainly, a lot of people have been asking me, Whale, when are you taking profits? When do you expect the top to be in? Etc, etc. So first and foremost, if anyone is lying to you into thinking they can predict the exact top right now, the exact date of the top right now, they are blowing smoke in your face. All we can do is go off the current data we have, the historical data we have, and then make assessments as the price action develops and change our biases and react when the price action does. There are a few tools we are looking at to give us a vague understanding of where the top will be or when the top will be in. So let's discuss the methods I will be looking at to know when to take profits. And guess what, guys? No one's able to predict the exact top on the exact date. It is a combination of taking profits, moving up to that exact top, and hopefully by the time the exact top is in, and just after it, you've scaled pretty much out of all your long-term spot positions. And that is the objective. The objective isn't to sell all your bags on the exact top. That is a perfect world scenario. It can never happen. Your objective is buy around the exact top, maybe a little bit after it, you've scaled out of 90% of your spot bags, so you do not buffer that downward move. Okay, so let's jump into it. So what I'm looking at first and foremost on this chart from a bullish perspective is going to be our RSI trend lines. And what I want to bring you to attention to is going to be the current black trend lines, which is around 66 to 68, and our next one is at 80. Let's discuss 66 to 68 first and foremost. We can see the 66 to 68 level has acted as a pretty important level of resistance in the prior two cycles. These levels have lined up almost perfectly. with the rejections from those dotted trend lines from the prior cycles. As you can see, the dotted trend line, okay, in the prior cycles has acted as the dead cap bounce high point before a continuation into the bull market. So really quickly to explain that, guys, every single cycle we see the all-time high. Okay, we see capitulation, we create a base of support. This is a yearly long base of support. Okay, we bounce from that level, and the highest point we reach from that level is going to be our dead cap bounce high point. That dead cap bounce high point actually develops into a macro / yearly level of resistance. In this instance, it is at 48,000, and we recently broke out of that. We discussed that yesterday, the 770-day resistance we broke out of. Well, that was that yearly long resistance. In the prior instances, we see that when we break above this level of resistance, the angle of the trend from the bottom to the point of breakout and from the breakout to the all-time high significantly increases. We can see it goes from about 30%, okay, 30%, to a high of around 60. We're looking 60, we're looking 70, we're looking 50%, degrees, what am I talking about? The angle of the trend significantly increases. So when the angle of the trend significantly increases, it represents that during the period of price action when the angle is steeper, it suggests there is more strength in the price action. And when we see that occur over a macro time frame, it generally is representative of a bull run. We usually see that develop in or after the halving event. Now, what we have seen in the prior two cycles is an initial rejection from that 48K level, represented by, again, we see the RSI rejecting from the zone. In this instance, we are breaking right through that level currently, which could indicate that the 48K level is going to close a monthly candle and we are going to push upwards. Now, this would trigger a earlier than expected bull run, of course, but it's also important to note that the monthly candle close does not occur for another 14 days, and the RSI breakout, which is a pivot, will not validate until 14 days. So as of right now, this is not a confirmation that we are going higher. This is an indication that we potentially could, and we need to wait for that break or that confirmation of the close above this level to indicate that we are not going to see a rejection from this level from the last two times. We are going to continue into an early bull run. The next one is going to be the 80 point on the RSI. What we generally notice is, if we look at the 80 point, the 80 point is kind of a break of that 80 point is generally when we enter, that parabolic phase of that bull run. If we look at a vertical line, we can see just when that 80 point breaks. Okay, we have break it over here, we break it over here. If we go back in time, we can see we break it round over here. We can see from that point of that break, we see a significant rally in Bitcoin's price action to that all-time high, right? What we also notice is between 7 to 10 weeks after 7 to 10 months after we actually have that break, Bitcoin forms a top. So if we take a date range trend over here and just go ahead and analyze the date from the point of the breakout, and we apply about 7 to 10, we can see 10 months after we break 80, we reach an all-time high. Okay, let's do this one. So this instance, 7 months after we break 80, okay, on the RSI, we reach an all-time high. And then finally, on this instance, if we drag it across to the all-time high, this is going to be 10 months after we break 80, we reach an all-time high. So that gives us a 10 to 7 or a 7 to 10 month range, after which we break 80 on the RSI, which we would expect the all-time high to be in. Now, it is impossible to predict the exact date, so what I will be planning to do as of right now, this might change, but as of right now, I'd be waiting for a monthly close above 80. I'd be waiting 7 months. And then between that 7 to 10 month period, that is when I'll be looking to scale out profits, expecting the top to occur at any point between those days. If we go over to the date range trend of the 4-year cycle, assuming the 4-year cycle develops exactly how we have seen in the past, we have seen the date range trend act in a different way. Days between tops and bottoms. If we look at the low from the first cycle to the all-time high in the first cycle, that is 1,064 days. The low in the second cycle to the all-time high in the second cycle, that is 1,064 days. So assuming that trend will repeat again, we could expect to see 1,064 days again from the low to the all-time high, and that takes us to a date of October 6th, 2025. let's go ahead and take a look at this, guys. If we do, again, an expected breakout, let's hypothetically say it takes us another couple months to get above here, let's say May, June, that would be 7 to 10 months. That would take us to around April 2025, and that is going to be quite an ambitious target. If we go conservative, we could expect maybe around June 2025 will be the end of that 10-month period, which is slightly off in comparison to this date range trend, which tells us again we could see an earlier top, we could see a quicker cycle, or maybe we're going to see an earlier start to the cycle and a longer cycle. It's very hard to tell for sure. However, these methods I'll be using to analyze the macro charts and take profits along the way. Let's go ahead and break it down to the smaller time frame. So as we said at the start of the video, we are retesting a major area of resistance. This is in fact the final level of resistance before I move to the all-time high, right? The next level of resistance above this level, besides our psychological levels, right? We have 60,000 as a psychological level of resistance. Absolutely, this is a level of resistance. But the next main level of liquidity is going to be sitting at that top point at 68,000, okay? Yes, we wicked a little bit higher. We're into 69. 68,000 is going to be that high. We're looking at 68,000. Okay, so this is going to be acting as the last level of resistance before an eventual continuation upwards to 68K, a very, very important level. So there is a possibility of a rejection from here. Now, I would make it very, very clear before we get into it. If we do see a correction from here, it would still absolutely 110% be considered a healthy correction, and the uptrend will very much still be intact. We could theoretically drop as low, okay, as $46,000, and the uptrend we are in will still be intact for a continuation upwards. Make that very clear to yourself. Only if we drop below 46,000 is there a risk of a continuation back down to 40K. Only if we lose 46. Why is that the case? So let's go ahead and explain that really quickly. If we look at this price action, what we had over here was a very, very, very clear horizontal range, okay? This is our horizontal consolidation. We had a lot of absorption going on. We had a range high retest. What happens on one side, we usually happens on the other side. We had a range low retest, and then we broke toward the upside. This is an area of support between 46 to 48. This is an area of support between 40 to 38. Thus, for us to break back into this range, and if we break back into the range, the possible range of price action is between 46 to 40,000, okay? For us to open up that to be a possibility, we would need to be losing the range low of support, which is at 46,000. And thus, that is why if we lose 46,000, there is a possibility we move to 40, but only if we lose 46,000. Until then, the macro trajectory is very much upwards, and our next target is going to be 60,000 if we are able to break above the $53,000 resistance. Overall, looks fantastic still, guys. It looks on the macro chart, it is looking fantastic. We are just running in to a little bit of resistance, which again, was expected. The price action is never just going to go permanently up. We're seeing a 25% rally now for Bitcoin. If we see a couple days of retracement, if we see a week or two of pullback, that is not going to be shocking, and it shouldn't be enough to make you think, oh, we're going to go to 12K, oh, we're going to go to 20K. Just like this correction here into support, everyone was panicking saying, oh, we're going to 30,000. We hit support. What are you talking about? The price corrected 20% from a resistance into a major area of support. There's absorption going on, momentum looking positive. Why on earth will the price action go lower? What narrative? And this is what I said before. For the price to break below major macro support, the overwhelming amount of people need to go from, oh, I'm holding Bitcoin to, oh, now I want to sell Bitcoin. If we have the ETFs just approved, if we have the halving event, which is considered a bullish event occurring very, very soon, why would people all of a sudden decide, you know what, I'm selling my Bitcoin, and thus the support will break? Remember, price action is made up of buyers and sellers. The narrative behind the market manipulates or influences people's emotions and thus decisions. For us to see support break on a macro time frame, the overall narrative needs to turn bearish, and there is no bearish narrative right now, and thus it is unprecedented to expect these levels of support to break unless we get a shift in the overall perception of the market going forward. If people start to think the market is overly bearish, and the 4-year cycle isn't going to work, and a whole bunch of other news events, then maybe people will start to offload their Bitcoin and we could see these support levels drop. But until then, they are just going to layer up. We're going to create higher lows, and the price action should continue. But again, guys, that doesn't mean we won't see short-term pullbacks. It just tells us that these high time frame supports are backed more than just a chart. It is backed on people's actions and decisions, okay? It is a narrative that is building up this trend, just as it is the entire time. It is a narrative that has resulted in this yearly trend to go upwards. Remember, guys, we talked about this back over here. We are going to see the price action reverse well before we see interest rates ease. It is not the fact that interest rates will ease that will push the price action up. It is the perception of the potential future interest rates easing, which is perceived as bullish, that will force investors to front run that and push the price action up. And that is exactly what we have seen this entire year. So going on to the short-term price action. If we look at the short-term price action, there is a little bit of a thing that I am concerned about. So let's go over to the, I think it's a 12-hour chart. Let's just bring this up. The 12-hour chart, first and foremost. This is going to be the one thing I am concerned about and the one thing I'd be watching for a correction to develop. If we see a 12-hour breakdown on this RSI, again, if we line up our points of support on the trend, the higher time frame trend, we're looking at this trend line over here, okay, this higher time frame trend, 1, 2, we have 1, 2, we have 2 retests, we have a confirmation that this trend line, okay, is a representation, or should I say this momentum is a representation of the price action from this low, okay. This cluster of price action here is a representation of the momentum over here and vice versa. Again, they are derivatives of each other. The RSI is the derivative of the price action. So if we see, I'm going to go ahead and get all these lines out of the way. If we see a breakdown of this RSI, it is safe to assume that the momentum developing within this cluster of price action has flipped negative before the price action has broken down from its trend. That could signify a retracement back down to this 46 to 48k range, something I'd be very concerned about looking and something I'd be watching on the short term if you were interested in scalp trading toward the downside. Even then, guys, like I said, if that does occur, it doesn't matter. The macro is still very healthy. So let's go down to a smaller time frame on the hourly chart, get rid of the RSI for a second and look at the price action. What we can see is a potential rising expanding wedge. Okay, we have 1, we have 2, we have 3, we have 4, we have 5, we have 6 points of retest. Okay, 3 on one side, at least 2 on the other side. We have a confirmation of a structure. So we have a rising expanding wedge. Rising expanding wedges are bearish patterns, meaning we do expect a retest of the range low of this pattern at some point. A breakdown of the range low could take us all the way down to this level over here. We're looking at 47,000, okay? This would be the lowest target of a breakdown of this structure, and that is why I'm saying we could potentially see a short-term pullback. But even if we see that short-term pullback, we actually just retest this high time frame area of support before we continue back upwards. And if we look at Bitcoin dominance is falling. It is possible that a correction here for Bitcoin could actually flow money into altcoins, and altcoins will continue higher. Nevertheless, what happens in the short term and the macro, the charts are bullish. If we break above this resistance, it doesn't matter how it occurs, the price action will continue. All I'm saying, guys, over the weekend, over the next couple of days, be aware that we could see a pullback, okay? And now isn't the time to ape into longs over here. This is the time to be patient, to watch how the price action reacts to resistance, wait for it to develop. If we start seeing absorption again, we look for levels of support we can re-enter for longs. Other than that, fantastic work. Taking your profits is all a good idea. Secure your profits and don't get greedy. Thanks for watching. I'll catch you guys on the next one. Cheers.